What's up, everyone? In this video, we're going to be going over the best way to analyze stock earnings reports. We're going to be covering how to find which stocks are about to report earnings. We're going to go over how to analyze those earnings in a pretty cool way. And then I'm going to show you the best way to play earnings so that you are profitable over the long term. So with that being said, let's get right into it. So we're going to start off by basically showing you how to find which stocks are about to report earnings. There are many ways to do this. I'm just going to be showing you my favorite ways. So I really like the Twitter account eWhispers, Earnings Whispers. They come out with a graphic or image every week highlighting the most important earnings to watch. We can see for this week, we have some huge earnings like Pfizer, Peloton, CVS, Disney, Coca-Cola, Affirm, companies like that. I like this because basically a lot of times you might have 20 or 30 earnings reports in one day, and honestly, some earnings reports aren't even that important. We really only care about the major earnings reports, at least I do. So that's why I like Earnings Whispers. They make it easy and they always come out with a nice image, which is great to see. Their Twitter account is eWhispers. If you didn't want to do this, you can just go to their website, earningswhispers.com. And then once you're there, you can just click calendar at the top left. And then you can basically pick any day you want. So let's say I picked Wednesday the 9th. Click that, and then you just want to make sure at this right where my cursor is, you want to make sure you have all selected, because that shows you all of the earnings reports rather than just the earnings reports before market open or after market close. So you want to see all of them. So I like that. Like I said, there are so many different ways to find which companies are about to report. Most brokers have some sort of watch list or just anything like that that shows you upcoming earnings reports. So that's good to know, but I really do like the Earnings Whispers Twitter. They're pretty awesome. So now that we got that out of the way, I want to cover how to actually analyze these reports. And we're not going to be talking about how to analyze the earnings reports on a fundamental level or a quarter by quarter revenue comparison or anything like that. That is for another video. But I do have a pretty cool trick when it does come to earnings reports. So I'm on Thinkorswim right now. If you want to use this trick, you will need to use Thinkorswim. So I definitely check that out. But if you do have Thinkorswim, you're going to want to click that Analyze tab at the top left right there, and then go to the Earnings tab right over here. From this point, you can type in any stock ticker and instantly see how the stock reacted before and after their earnings report. And on top of that, you can also see how the options market reacted to it. So instead of having to, go dig through a 2 or 3 year chart to see how the stock normally reacts to earnings, you can just go right to this Analyze Earnings tool, type in any ticker you want, and see how it moved. So let's say we went back to Microsoft. We can see the past 8 quarters just by typing it in. So we can see that there's a little white dotted line right down the middle for each earnings report. That shows you the day that they reported earnings. Anything to the left of that is the movement before earnings. Anything to the right of that is the movement after earnings. So looking at the chart, it really just makes it easy to see how the stock reacted. Let's say you're looking to find a pattern, let's say you're looking to see how companies normally report, how the stock normally reacts when the stock runs up before they report. You can instantly see, all right, Microsoft went up in the third quarter of 2020, and then it continued up after earnings. And you can just compare it like that. So there's a bunch of different things you can do. I'll leave the strategy to you guys to figure out. But in terms of volatility, the second row right here, this is extremely important for options traders. Basically, anytime the yellow line is greater than the red line consistently, that means that options traders won in this earnings report. Anytime the red line is greater than the yellow line, that means options traders just got screwed over. So if we look at Microsoft, there are 1, 2, 3, 4, 5, 6, 7, 8 earnings reports, right? 8 quarters. out of those 8, let's count how many times the yellow line was consistently greater than the red line. We have 1, and that's basically it. Like, it was a little bit, like the yellow line was above the red line a little bit in the first quarter of 2022, but it doesn't count. This basically goes to show you how options traders consistently get screwed over when playing options. Like, sure, you might have a couple lucky trades with, Facebook going crazy on earnings or Netflix going crazy on earnings, but for every like one crazy event that you have, like with Facebook or Netflix, you have like 10 other events where you just get screwed over. So I don't want to say playing earnings, I want to say buying options before earnings is a losing strategy. Now, it depends how you do it. Like, if you want to be very technical, like if you bought really, really deep in the money call options before earnings on a company that is consistently growing, you might do okay, but that's not what most retail traders are doing. So back to the Microsoft example. You can just see how options traders consistently get screwed over. You can also see how the at-the-money straddle performs, which, as you would expect, gets screwed over because most of the time options traders lose when buying options before earnings. And then last but not least, we can see how the earnings actually was compared to what it was expected to be. For example, we can see the green line represents what the, I guess you could say, major banks were expecting out of the company's earnings report. And then we can see what the yellow line actually was. One thing to keep in mind is that this only measures earnings per share. And there's a lot more that goes into a stock's earnings and a stock's reaction other than earnings per share. Like, we have a lot of other metrics, like how the revenue has grown year over year, and even more importantly, guidance. That's a huge thing. So, it's kind of helpful, but I guess you can just, you can compare it because let's say like one time let's say we went to like Peloton really quickly. So like we can see right here, Peloton's EPS just got absolutely destroyed. We can see also that in the fourth quarter of 2021, not only did Peloton's EPS fall, but it was also lower than Wall Street expectations, and you can see how the stock just got absolutely destroyed. So it's definitely a useful tool, but there's just a lot more that goes into it besides EPS. So if we went back to Microsoft, another cool trick you can do is you can click the Zoom tab right here, right where my cursor is, and you can see how the stock moved intraday. That can also be useful. But now that we got over like this cool trick, I just want to talk more about how to play earnings so you have the highest chance of being profitable over the long term. It will not be by buying calls or puts, especially if they're out of the money or at the money. Basically, the reason for this is because before a company reports earnings, market makers, I guess you can say, rise the prices of options because there's more volatility expected in the marketplace. So, if we went in like a 30-day, 1-hour chart, we can see Apple's earnings report is right here on the 27th. What I want you to look at is this blue line right here on the bottom. We can see in the days before Apple reported earnings, this blue line started to rise. That essentially just represents what the market or how the market expects Apple's volatility to be. So basically, when the blue line goes up, that shows that investors in the market are like, okay, Apple's about to move pretty big. We don't know if it's going to be up or down, but we do know it's going to be big. So when the implied volatility rises like this, anyone who's buying these calls or puts, especially if they're at the money or out of the money, are just overpaying. So you don't really want to be doing that. So with that being said, selling put options can be a good strategy ahead of earnings if you're trading a stock that, one, is growing and a stock that, two, you're comfortable holding. Because basically by selling the put option, you are taking advantage of the overpriced options in the market, and at the same time, if the stock blasts up, all right, you just keep your premium and run. If the stock doesn't do anything, you keep your premium and run. If the stock falls a little bit, you keep your premium and run. So, you're profiting in 3 out of the 3 situations right now. The only way you really get screwed over is if the stock just absolutely gets destroyed. Then you would have to buy shares at your strike price, but you still get to keep your premium. So So basically, selling put options is a big win ahead of earnings if you are doing it on a company you're fine holding and that's growing over the long term. So it's like there is a big if with that, but you just don't want to be gambling like YOLO calls or YOLO puts ahead of an earnings report. Like, yeah, it might work sometimes, but for every one major earnings, like I guess you can say one major earnings surprise like we had with Facebook, we might have 10 earnings duds where you just lose everything. So that's just one thing to keep in mind. So selling puts can be a great way to play earnings over the long term. And if you are looking at a company that you are fine holding over the long term and that you expect their earnings to continue to increase over the long term, and that's trading at a fair valuation, shares can also work. You just don't want to be YOLOing into crazy options. So I hope this video helped you. Keep in mind there is a lot that goes into earnings besides like earnings per share and chart patterns. A company's guidance and expectations and revenue year by year or year over year and quarter over quarter plays a huge role. So please keep that in mind. Besides that, I hope you guys learned something from this video. If you did, please consider subscribing. But other than that, thank you guys so much for watching.